Hey everyone, welcome back to Corporate Decoder. Today, T.D.O.T just filed an 8K announcing a key change to its benchmark and sponsor agreement, and I am seeing a strategic pivot that is worth understanding. Quick note, this is not financial advice, just my take on public filings for educational purposes. The fund is shifting its price reference, and this move could signal bigger things for how this ETF operates going forward. So what is going on here is pretty straightforward. 21 shares Polkadot Staking ETF, or T.D.O.T as it is traded, is changing how it determines the value of its shares. You see, every fund needs a reliable way to figure out its net asset value, or NAV. And that usually means picking a specific price index or data source for T.D.O.T. That source has been the CME CF Polkadot dollar reference rate, but that is changing. The company, through its sponsor 21 Shares US LLC, has entered into a new licensing agreement. This new deal is with FTSE International Limited, and it means T.D.O.T will start using the FTSE Polkadot index as its new pricing benchmark. This switch is set to happen very soon on the 27th of August 2026. This isn't just a minor tweak. The fund is moving away from the CME CF Polkadot dollar reference rate, which it had been using. This new benchmark from FTSE is crucial because it is what the fund will use to calculate the value of its shares. Think of it like changing the official clock that everyone in town agrees to follow. FTSE is a well-established player in the index calculation world, based in London. They are experienced with digital asset indices, which is important because we are talking about a fund that is designed around staking Polkadot. The key here is that FTSE is unaffiliated with the sponsor, which can sometimes be a good thing for independence and transparency. Now, there is another update that is pretty interesting. The fund and its sponsor also agreed to an amendment to their sponsor agreement. This amendment changes how often the sponsor gets paid. Before, the sponsor fee, which is what the sponsor gets for its services, was paid weekly. Now, it will be paid at least quarterly, and get this, the payment will be made in DOT, which is Polkadot's native cryptocurrency. This shift from weekly to quarterly payments, and especially getting paid in DOT, is a significant change. It suggests a few things. For one, it might simplify things for the sponsor, reducing administrative overhead more importantly. Receiving payment in DOT means the sponsor is directly exposed to the performance of Polkadot's cryptocurrency. This aligns their incentives even more closely with the success of the staking aspect of the ETF. It is like they're saying, we believe in DOT, and we want our compensation tied to it. And speaking of staying updated on what these filings really mean, if you want to see how T.D.O.T stacks up against others in our risk index, or get a quick scan of red flags pulled directly from filings like this one, you can check out Decoder.report. The direct link is in the description and the pinned comment below, where you can use the watch button to stay updated. But wait, there is more. The fund is also officially changing its name. It is going from 21 Shares Polkadot ETF to 21 Shares Polkadot Staking ETF. This name change, along with the other updates, became official when a certificate of amendment was filed in Delaware. This really emphasizes the staking aspect, which is a key feature of what this ETF is designed to do. It is not just about holding Polkadot, but actively participating in its network to earn rewards. These changes are all being formalized through an updated trust agreement. This document basically lays out the rules and structure of the fund. The new agreement reflects the use of the FTSE Polkadot index, the revised sponsor fee payment schedule, and the new name. It also includes other minor updates to keep things clean and clear, but the filing assures us these don't fundamentally change the rights of shareholders. So to recap, we have a fund that is changing its pricing benchmark to FTSE Polkadot index, adjusting its sponsor fee to be paid quarterly in DOT, and officially renaming itself to highlight its staking focus. These aren't just administrative changes. They signal a more refined strategy for the 21 Shares Polkadot Staking ETF. By moving to a new benchmark, they're potentially seeking a more accurate or perhaps more desirable pricing source. The shift in sponsor compensation, especially being paid in DOT, really underscores their commitment to the staking model and aligns the sponsor's interests directly with the cryptocurrency itself. Looking at this, it appears 21 Shares is doubling down on the staking aspect of this ETF. The name change is a clear indicator, and the alignment of the sponsor's compensation with DOT performance reinforces this. For investors, this means the fund is likely aiming for a more direct and perhaps more rewarding exposure to Polkadot's staking ecosystem. The choice of FTSE as the benchmark provider is also interesting. It could be that FTSE's methodology offers a different perspective or a more robust calculation that they believe better serves the fund and its investors. This is Duncan Moir, president of 21 Shares US LLC, signing off on this report. Now, looking at these changes more broadly, the strategic pivot here is quite clear by emphasizing staking in the name and by having the sponsor compensated in DOT. T.D.O.T is positioning itself as a more dedicated vehicle for investors looking to benefit from Polkadot staking rewards. The shift in benchmark might also be a move to distance themselves from potential issues or perceptions surrounding previous benchmarks, or simply to find one that better aligns with their evolving strategy. The biggest risk I am watching is how this new benchmark, the FTSE Polkadot Index, performs and is perceived by the market. If it is seen as less reliable or less representative than the previous one, it could create uncertainty. However, the fact that the sponsor is taking payment in DOT suggests a strong conviction in the underlying asset and the staking strategy. My biggest concern is always investor understanding. Are people aware that this is not just a passive holding of DOT, but an actively managed staking strategy with its own associated risks and rewards? What I'm actually looking for is continued transparency and clarity from 21 shares on how the staking rewards are being generated and passed through to investors. This filing is a good step in refining the fund's identity and operations. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, please like, subscribe, and join our Discord community.